Good morning, students. This is your commerce class. I have already told you that this March first week, most probably on March 5th, you will have a examination on financial education, and we have completed a lot. So I hope you all have the notebook. We have sent all the notes. I hope you have seen all the videos which I have sent. And today I want to take about something about the banks. Already we have sent a video on banking types of banks. So I thought I can also say something. So bank, bank is a financial institution, isn't it? So it's a financial institution which is accepting deposits and lending money. Those who are in need of money, they are lending money to them. For when you are depositing money, you are getting interest from the bank is giving interest to you, and when you are withdrawing money or when you are taking loans, you have to pay interest to the bank. When you are taking money or taking loan from the bank, you have to pay interest to the bank, and this interest is actually the revenue income to the bank. Okay, with that income, that what you are paying as interest to the bank, no, on loan that you are taking, on that that is the income to the bank. What is the income to the bank? That interest that you are paying on the loan. Okay, and deposit, for the deposit the bank is paying interest to you. Okay, so you must know about the various types of accounts. You already know about that types of accounts. We have mainly 4 types of accounts, that is savings deposit account, current deposit account, recurring deposit account, and a fixed deposit account. Okay, there are 4 types of accounts mainly. And the savings accounts are usually meant for the small savers, in order to encourage the people to save money. Usually the people's salary account are always through the savings account, and the bank is, of course, the bank is providing a certain percentage of interest on your amount. Why they are providing interest? Then only you will be depositing something in the bank. Otherwise you can keep at home. No, why should you keep it depositing the money at bank? No need, because when you are keeping money in the bank, it is growing, isn't it? The money is growing. So every year you are getting a certain percentage of interest. But nowadays the rate of interest is very low, and for savings and all we are getting only 4% on the amount that you have deposited. Okay, so the savings deposits are always open to encourage the people to save some money. Okay, always encourage the people to save some money, and they are also getting certain percentage of interest. Okay, that is what savings account. You can ask your parents and all will have savings account. Okay, of course you can also start with the help of your parent a savings account if you are 10 years of age. Okay, and next is current deposit account. Current deposit account, it's a current account. It is usually opened by the businessman. Current deposit account are usually opened by the businessman, and this deposit, they are not giving any there are no restrictions on depositing money and withdrawing money, because businessmen, that every time whenever they are getting money, they will be depositing in the bank, because they cannot keep it with them, that much money they will be getting, business people, so that they will be depositing in the bank, and whenever they are need of money, whenever they are in need of money, they have to withdraw the money, they have to take that money from that. So on what amount they will be paying, they will be charging interest. So usually the current account holders will not be provided, they will not be paid any interest. That means the bank is not providing any interest on this current account, because they can withdraw any and deposit any time, they can take any time, no problem, no restrictions, and it's opened by the businessman, and zero interest is paid on the current account holders. Okay, and next is recurring deposit account. Recurring deposit account, I can say it in like RD account. RD, recurring deposit. Your parents are very familiar with that. Maybe the post office people are coming to your house, agents are coming to your house and taking money every month. You might be knowing that. Okay, every month they will be taking money from you. So what is that? Certain amount regularly you are paying to the post office, that is, or to the bank, or wherever the RD account, wherever the account, you are regularly paying a fixed amount. I will tell you the example, like 500 rupees every month, 500 rupees for 5 years. I have taken an RD account, that is RD in a post office, and then I have to pay any amount. You can pay the 150, 200, any amount, but it must be same in every month. Okay, so every month I paid 500 rupees for 5 years. It has to be paid for 5 years. So for after 5 years you will be getting the money. So that, and recurring deposit account usually getting interest. Their bank is paying interest more than the savings deposit account. Okay, more than savings account, that is 7%, 6%, 6% and all they are getting, because no fixed deposit is the highest. That also nowadays giving only 8%. So this is maybe 6 or 7% they will be providing. Okay, so recurring deposit, those who want to save regularly for a fixed period of time. That is what, for a fixed period of time, regularly, every month you are paying. Okay, that is what recurring deposit account. And what is this fixed deposit account? You are very familiar with this term, fixed deposit account. If you are depositing a particular amount in the bank, you cannot, if it is for a particular year, particular period, if I am depositing a certain money for 1 year or maybe for 2 years, I cannot withdraw the money before that. I can take the money only after 1 year or 2 years. That is what fixed deposit, and only one amount you are depositing. One amount, that is, as we told about recurring deposit, we are not regularly paying. Every month we are not paying. This every month we are not paying like recurring deposit. What once we paid 150,000 we paid there for 1 year or for 2 years. After 1 year or 2 years only you can take that money back. And one thing is, the fixed deposit is getting, or the bank is providing highest interest on this fixed deposit account. Highest. First it was 10, 12 and all was there. Now it is only 7 or 8%. Okay, so these are the types of bank accounts. Types of bank accounts, what I said: current deposit account, savings deposit account, fixed deposit account and recurring deposit account. I hope you understood. Okay, and next we have electronic banking services. Nowadays you know that everything is electronic, internet, no, through internet. We are not going to the bank also. Everything we are doing from our home itself, with the help of our mobile phone or with the computer, with the help of internet. Through internet we are doing all those things, isn't it? So everything we are doing, even you are buying things, online shopping, every time you are buying, no, whatever you are just looking into the phone and telling I want this, you are ordering this. Even the small children know that how to order that, isn't it? That is what electronic banking. So the banking and all, even the money transfer, for charging phone, for charging your dish TV, TV, for charging your whatever is required, electricity bill, paying the electricity bill, insurance, everything you don't want to go, everything is with the help of those facilities, electronic facilities. Okay, so first one is EFT, that is electronic fund transfer. Electronic fund transfer. What do you mean by electronic fund transfer? That is transferring the fund from one bank account to the another account. That if I am paying money to my husband, means I have to transfer from my account to my husband's account. That is what electronic fund transfer. From my account to another account I can able to transfer. That is through with the help of internet. That is through phone or whatever, electronic fund transfer. That is EFT. Nowadays it's all are doing money transfer, electronic fund transfer. Okay, and next is automated teller machine, ATM. The full form of ATM is automated teller machine, not automatic. Okay, automated teller machine. I will send you the notes, don't worry, so you will know the spellings. So what is this ATM, which is very very familiar to all, and you have gone to ATM, maybe you know to take money from ATM, isn't it? So ATM, you know that it's always as in the side of the bank or in the corner of the city you can see the ATM. For what purpose? Earlier days, what we used to do, we used to take the money, we carry money in a bag or suitcase. But nowadays, we don't want to carry the money whatever you want. You can take only a card. ATM card is enough. With that, the help of that card, you can withdraw the money, isn't it? So what is required? 4-digit PIN is required, which should not be known to any other people. It should be hidden actually. You should hide that always. Should not reveal that 4-digit PIN number to anyone. And while you are entering into the ATM, you are about entering that card into that, inserting that card in the ATM, and you are just asking them, they are asking what is the PIN number, you are typing that, but you make sure that no one is behind you, no one is looking in your PIN number, what you are typing. Then they will be asking the amount, what they will be asking the type of accounts, like savings account or current account, they will be asking, and you can withdraw the money from there. Isn't it? So this is what ATM, and you know ATM is 24/7, that is 24 hours and all the days, that is every time it is available. You can take money anytime, it's available. That is what ATM. And we have debit card and credit card, that is also I know very familiar to you. Debit card is actually what you are telling, that is ATM card. Your parents having debit card which they are withdrawing your salaries and all, no, they will be providing, the bank will be providing the debit card, and with the help of this debit card you can withdraw what is in your account. Suppose if your account is having 50,000 in your account, the amount is 50,000, so you can withdraw up to 50,000. It's not necessary that at a time you have to take all the 50,000. You can take any time. That is 5,000 if you want now, 5,000 next month, or 5,000 this month last, anytime you can withdraw, but you can only withdraw that 50,000. That is what debit card. It's also a plastic card. Debit card, everything you know, that's a plastic card which can be used to withdraw money what is in your account. That is what debit card, which is there with your parents. You can see that what is debit card. Just ask them, they will show you debit card. We always tell them ATM card. It's written there on the surface of that, it is written that debit card. And what is credit card? What is credit card? That is also, you might have seen in all the shops, credit cards are accepted here. What is that? And you will be thinking, oh, credit card is something great. It might be thought like that, no, credit card is something great. No, credit card is just like a loan only. If you don't have money and if you want to shop something, you are going out, if you have a credit card, if you have opened a credit card in the bank, you have to first open a credit card that account should be in the bank, and they will be providing you a credit card, and with that credit card you can shop up to a certain amount of money for in a year, particular year, for a particular period. So if you are going to any of the textiles, suppose we can say if you are going to Kalyan Silks for buying something, for buying textiles or for dresses, what do you want? If it is like 20,000 rupees you bought, not 20,000, you went for a purchase of marriage, went for shopping for the marriage, so you have it 20,000, it cost 20,000, so you have shown this credit card to them, and they have typed all the information, so the information will all the details will come on their screen. And what you will do, the bank account only open, no, the bank will send that money to this Kalyan Silks, 20,000 they will send the bank. Later on you want to pay the money to the bank, later on only, not now. They will tell a period, within this period you have to pay. If you are not paying within that period, you have to pay interest on that. Okay, so credit card that is what credit card, that what is actually credit card? It's also a plastic card which is issued by the bank, for more than, you can take more than what is in your account. So if your account is only 10,000 means I need 20,000 or 30,000. 30,000 I need. Now it's not in my account, no. By using credit card, you can take next to 20,000. So that is a loan. Okay, so what I said, electronic fund transfer, which you can transfer the money through electronically, then ATM, automated teller machine, then debit card and credit card. Debit card and credit card is a plastic card. Okay, and I told last class, I have told already about the Reserve Bank of India, which is our central bank, bankers bank, isn't it? It was established in 1935 and it is nationalized in 1949. And who is the present Reserve Bank governor? Shaktikanta Das. Okay, and Reserve Bank, they are actually controlling the bank. controlling all the functions of bank. It's a banker's bank, Central Bank of India. Okay, so why I have told all these things now means because next week, I mean March 1st week only our examination, March 2nd week only our class will come. So I cannot able to tell all these things. So I thought that I can send this video and make you know all these things. Okay, I hope you understood. So thank you so much. Please go through what and all videos we have seen. It's only objective type of questions. Don't worry, options also there. Okay, in that question paper, so many 4 options are there. So don't worry about the question paper. You just go through what you have studied. What I have taken. Okay, thank you so much.